Okay, welcome to the Test Yourself section of Learning Module number 7. And as always, once you get past this slide, you'll need to advance the slides yourself. All right, let's take a look at what type of information is contained in each financial statement. So look and see which financial statement would tell you would you look at to find the following information. Okay, so here's our answers. Accounts payable, you're going to be able to find on the statement of financial position or the balance sheet, as well as the statement of cash flows. Changes in net assets, you're going to find again on the statement of cash flows, but you're also going to find them on the statement of activities. So the statement of cash flows is going to have it at the beginning, and the statement of activities is going to have it at the end. Net assets released from restrictions, you're going to find that on the statement of activities or the income statement. And then the amount of money that the organization spent on fundraising, you'll find on the statement of functional expenses. Okay, so here's a little bit more practice on working with the different financial statements. Take a look at these 3 transactions and figure out what the CPAs would need to do if they found these 3 and how they would adjust the financial statements. Okay, so if it turns out that I paid $500 more towards my mortgage than they had originally recorded, well, mortgage payable on my statement of financial position would actually decrease by $500 because the payable is the amount that I still owe, and it turns out that I paid $500 more than they had originally recorded. However, because I spent the $500, my expenses would go up on both the statement of activities and my statement of functional expenses, and theoretically my cash would decrease by $500, assuming that, I paid in cash. The $10,000 from the line of credit, this is going to be new cash flowing into my organization. So my cash position is going to increase by $10,000, and it's going to be under the financing activities, cash from financing activities. But my liabilities on the statement of financial position would increase by $10,000, maybe even more if there was an interest rate charged. Because, hey, now I took the $10,000, now I owe it as well. If I purchase $1,000 in supplies, my cash is going to decrease by $1,000. $1,000 in expenses are going to be recorded on both of those statements that you see there. Now, where it gets tricky is my statement of financial position potentially is also going to increase by $1,000 because I have supplies on hand. What I'll say is, generally speaking, most organizations are not going to be recording that last one. It depends on the degree to which you do an annual inventory. It depends on the degree to which you do it on the last day of the fiscal year, how much of the supplies you had left, that sort of thing. But certainly it would be affecting the other 3 financial statements. Okay, take a look at question 3, and if you saw this note in a financial statement, what would you think? Okay, well, we don't know for sure. But certainly, because we know that land and real estate is recorded at the value when purchased, you would conclude that they probably purchased a new building and the land upon which it sits. So what I would do is I would go back to the rest of the financials and take a look and see, did I have a new mortgage? Did my assets go up in terms of building and property? And that's what I would look for. So there's some practice with the financial statements, and don't hesitate to ask me any other questions on the question board.